Today, we're pulling back the curtain on a legendary trading signal. But we're not stopping there. We're also going to reveal a professional's secret weapon that makes it even more powerful. Let's dive right in. You know how chaotic market charts can get, right? Just a mess of lines and bars? Well, what if, in all that noise, one single clear pattern could pop up and signal that a major bull market was about to kick off? Well, that pattern has a name. It's called the Golden Cross. And today, we're not just going to define it. No, we're going to show you how the institutional traders, the smart money, use a little secret to confirm this signal before they make their big moves. This is where it gets really good. All right, first things first, let's decode this legendary signal. It all starts with one super important building block. And that building block is the moving average. Just think of it like this. Daily prices jump all over the place, right? They're noisy. A moving average just smooths all that noise out. It's like drawing a nice, clean line right through the chaos so you can actually see the market's real underlying direction. So, how do we get this golden cross? Well, it's kind of like a three-step dance between two of those moving averages. First, you've got your short-term average. Think the 50-day. It's quick, it's nimble, it tracks what's happening right now. Second, you've got the long-term average, usually the 200-day. This is the big, slow, steady ship that shows the deep underlying trend. And the magic? The magic happens at step 3, when that fast, zippy short-term line crosses up and over the slow and steady long-term line. That single intersection. That is the golden cross. And you really can't overstate how big of a deal this moment is. Our source material says this is considered a very bullish long-term trend signal. It's the kind of thing that makes traders everywhere sit up straight and pay close attention. But here's the thing. A signal is just a signal, right? It only matters if the right people are acting on it. Which brings us to our next crucial question. Who are these right people? I mean, who are the players that actually have the power to move the entire market? So on one side, you have retail traders, individual investors, probably like you and me. But on the other side, you have the institutional giants. We're talking about the banks, the hedge funds, the big money managers. And here's the thing. They're trading with enormous amounts of capital. So when they make a move, their sheer size creates waves that push the whole market round. They are the smart money. So that leads us to the million-dollar question, doesn't it? If the golden cross is our big flare in the sky, how do we know if the smart money is actually buying into it? How can we possibly see their footprints? Well, believe it or not, the answer is hiding in plain sight. It's in a piece of data that so many people just glance over, but that the pros watch like a hawk. It's all about the trading volume. Now, trading volume is simply the total number of shares that are changing hands, but it is so much more than that. See, because it takes massive volume to move a stock's price, high volume is often a direct fingerprint of institutional activity. It tells you when the big players are getting in or getting out. And this is where it gets really interesting, because we can actually interpret what they're doing. There are 4 basic patterns to look for. See a ton of volume on a day the price is going up? That is super bullish. It's a huge sign that institutions are buying. Now, how about low volume on a day the price pulls back a little? Guess what? That's also bullish. It means there's not much conviction, not much power behind the selling. On the flip side, high volume on a down day is bearish. That's a big red flag that institutions are selling. And finally, low volume on an up day, that suggests the buying is weak, that a rally might not have legs. Okay, so let's put the pieces together. We've got our legendary signal, the golden cross, and we have our institutional secret, volume analysis. Now let's combine them to create a truly powerful 1-2 punch. First up, the golden cross gives you the big picture context. It's like the weather forecast, telling you the entire market environment might be shifting from bearish to bullish. But hey, a forecast isn't enough, is it? We need confirmation. And that's exactly where volume comes in. Seeing those bullish volume patterns, like high volume on up days, right after a golden cross confirms that the smart money sees the same signal and they're acting on it. And when you combine that long-term context with real-time confirmation, well, what you get is a high-confidence trend strategy. You're not just following a pattern anymore. You're following a pattern that the market's biggest players are validating with their own capital. So, let's bring it all home. We've taken a classic signal and layered on a professional-grade confirmation tool that really gives it some teeth. So let's just quickly recap the key takeaways here. First, the golden cross signals a potential long-term uptrend. Second, the smart money, those institutional traders, are the ones who really move the market. Third, Trading volume is your window into what they're doing. And finally, the real power comes when you combine the golden cross for context with volume for confirmation. But this leaves us with one final big question to think about. In today's markets, which are just dominated by algorithms and lightning-fast trading, do these classic human-readable patterns still have the same power they once did? It's definitely something worth considering. Thanks so much for joining me for this one, and I'll see you next time.